The share of US global foreign currencies is reducing dramatically. So US treasuries around the world have fallen to a record low. Now, what does this mean? And why are central banks around the world stacking gold? They're saying the quiet part out loud. The fact that they're stacking gold instead of US dollars. And they've been working to de-dollarize since 2009 when BRICS, Brazil, Russia, India, China, and South Africa came together to de-dollarize. It's right there on their website. And all of a sudden, Bitcoin is created. That's interesting. We've been sharing with you guys around what we believe is going to be the next stock market collapse, which is the private credit markets. The private credit markets is something that nobody's paying attention to. We're too distracted with the war narrative, and there's a systemic thing happening behind the scenes called private credit. Do you remember back in 2006 to 2008, the housing collapse that started with the subprime mortgages? Well, there's something really bubbling behind the scenes called private credit. The Federal Reserve can't even tell how systemic and how big this is. They've admitted that. So we have an overvalued stock market based on the Warren Buffett indicator. You have the Mag 7 melting down right now. We have a private credit market, which BlackRock is wanting to push into your 401k. We have a war narrative, and if we have boots on the ground, these markets are going to melt. Now, here's the good news. Remember, Warren Buffett, buy when there's fear, sell when there's greed. Unfortunately or fortunately, this is where you get wealthy. Remember, only 10% of the population owns almost all the capital markets. It moves from the undisciplined to the disciplined. So how I've positioned myself from 2020 to 2025 be a little bit different from 2026 to 2030. I was heavily focused on offense, and then I started to transition to defense. Let me explain. I invented what's called Capital DR. It's not an investment, it's a system that helps you navigate through economic cycles. There's been over 32 major market collapses in the last 200 years. And I finally started to study this at a deep level. I came from banking, I didn't even understand how the system worked. But when I finally woke up is in 2020 when they shut down my business and took away my income. Key, they took away my ability to feed my family by shutting down my business next door. They locked my doors with the pandemic. So then I started to realize, I'm like, wait a minute. Is crypto my savior? All of a sudden, it's going parabolic only if I was able to understand how wealthy moved through the system. So I decided to study it at a deep level. I realized that cash is trash. Cash flow is king. You don't need more income, you need more cash flow. You can do both, increase your income and increase your cash flow, it's game over. Next is A, assets. I wanted to make sure that I was in assets that were deflationary, that had fixed supplies, and that would survive into the next financial system. That's how I got heavy into digital assets. And I'll share with you my exact portfolio on the back end, no gatekeeping. So A, assets, I realized is called offense. Offense looks like this. This is what they put your retirement in, 401k, crypto. So you're trying to catch fish in a barrel, hoping that you retire, you don't land in like a 2006 to 2008, and hoping that these markets don't melt down with the private credit markets and the Mag 7 melting down, and a war narrative, boots go on the ground, your 401k is going to melt down. So that's like catching a fish in a barrel. What you use as retirement offense, we trade. We calmly exit on the way up when people are trying to get greedy. We enter when the markets come collapsing down. Doing a video tomorrow. Warren Buffett is quietly sitting on a shitload of cash. Why? Because he's waiting for the drop. He trades what you see as retirement. So A is offense. It goes like this, okay? It's very easy. It's not that difficult. What we do with A is when we're in profit, we pull profits off the table. And P, this is where I changed the game. I built defense models, which allow me to, and cash flow models, which allow me to be calm when we're in a bear market like this, when we're in the red. So now I'm in defense. What is defense? Cash value life insurance, family banks. It's called life insurance. We use it during our life. I protected my principal, so when you come collapsing down, I insured my profits. I have permanent life insurance, and I have L, which is leverage. But when the markets go red and they just completely melt down, I leverage against my own family bank at low interest, and I go in and I buy more cash flow and I buy red assets, good companies at a fair price. I'm able to sit it out because I don't have to pay the loan back, comes off the death benefit for the next market. When the market goes up, I now have free assets. I also buy things like silver for bartability and stability. I like Berkshire for stability and longevity. And I use copper more as a trade, and I use Bitcoin as my hedge against inflation and stability for the future. It grows 50% every year. And then DR is I de-risk. So now that we're in the bear market, today is March 31st, 2026, this is where you get wealthy. What happens is you enter when there's greed. You exit when there's fear. You should be entering when it's red and exiting when it's green. You see, it's all about inverting everything. If you invert everything in this 3D world, you're going to win. It's not that difficult. They just make it very difficult. Remember, what you see as retirement, we trade. What you see as boring, we use to defend. Wealthy people have a lot of insurance, a lot of real estate, trust, and LLCs. But they demystify it, they make it seem super difficult, and it's not that hard. You just need to understand the difference between income and cash flow. So when I get paid income, I take 10% and I buy dividend stocks that create cash flow, make money while I sleep. I also created businesses that make money while I sleep. But I take that money,